Okay, so let's take a look. I'm gonna have to pull this up, so bear with me for just a moment here. Which one is this? I don't know which problem this is. 8. I don't think it's this one. Nope. 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 Okay. Hold on just a second, because it doesn't give me the actual problem number on here. Oh, I was going to show you the Schedule B. I'm going to do that too. There it is. 13 through. Okay, this one. Let me show you before we get to this. I'm going to show you the Schedule B. Actually, I want to see the Schedule B though. Okay, so the Schedule B is used for semi-weekly scheduled depositors. You'd also use it if you were, had a next day deposit requirement. Again, all the information and the instructions are right up here. You just have to read it. The numbers, so you can see, this is divided up into 3 months. Month 1, month 2, month 3. They all have 31 days. Obviously, not every month has 31 days, but you just use the days that were required. So if this is January, February, and March, obviously February would end at either the 28th or the 29th, depending on whether it was a leap year or not. Each of these corresponds to a day of the month. So if you had, and it would, what you would enter in here is the amount of the liability that was incurred on the day that the funds were paid, that the wages were paid. So if you got a pay periods, like a semi-monthly pay period on the 15th and the last day of the month, you would have an amount entered into corresponding to the amount of liability, how much is owed, total income taxes, total of Social Security and Medicare taxes, both employer and employee portion, would be entered into the box corresponding to the day that you made that payment. Okay? So you'd have amounts on the 15th, and if this were February, the 28th. This tells the IRS when the amount was due. They know when the deposit was made. They'll match it up with when it was due to determine whether or not you paid it in time. If there was, maybe you had an employee who was terminated and you live in a state that requires that you issue their last paycheck on the day of termination. There might be then a small amount on one of these other days. If you had to pay them on that day, say that they were terminated on the 23rd, and there was a payroll tax liability associated with their wages, you would have an amount on the 23rd. So it's not that you're going to have these only on the paydays. You may have some out of cycle pay periods as well. Either individual employees, or maybe, maybe we normally, this is December, we normally pay on the 1st and the 15th, so we've got amounts there and there, but we gave out some bonuses on the 31st. We incurred a liability then on the 31st, so we would have an amount entered on line 31 of this month, of the third month of that quarter. And then the total amount of liability for each of these months is summed in each of these boxes, and then the total liability for the quarter is listed then in this last box. So it's very similar to that monthly liability. Again, that monthly liability, you're telling the IRS how much was owed each month. They already know if you're a monthly scheduled depositor when it should have been deposited. You don't have to tell them when that liability was incurred in that case, and they know. But here, if you're a semi-weekly depositor or you had a next day requirement, they don't know the date that you should have made that deposit. The Schedule B tells them that date. Okay. Questions on the Schedule B? Okie doke. So let's go back and take a look at this problem. All right, we got Stan Barker. Is this, I don't know if I can make this any bigger or not, maybe. Oh, a little bit bigger. That's better, huh? Okay, Stan Barker. Open to quick stop market January 2nd, 2000 XX. Business is subject to FICA taxes. At the end of the first quarter, Barker, who's president of the company, he has to file the Form 941. So if he's president, he's probably the one signing that 941. Chances are he's not actually the one filling it out, but he still has to sign it. Employers for 941. The company is a monthly depositor. All right. So if he's a monthly depositor, is he going to fill out a Schedule B? Is he going to be required to fill out a Schedule B as a monthly depositor? No. No, that Schedule B is for semi-weekly depositors and next day depositors. So we don't have to worry about the Schedule B, right? So we don't have to do that for Stan. Let me see. What we are going to fill out then for the monthly depositor, this is the check mark. You were a monthly scheduled depositor for the entire quarter. We would check that off because he's a monthly depositor. All right. Payroll information for January through March. And these wages are for each, these are full wages for the quarter for each of these employees. Okay, we've got our wages, Social Security tax, Medicare tax, income taxes that were withheld. So total amounts of deductions, if we add all of that up, we should get to add these three amounts up, we should get to $89.55.66, and our net pay, which would be our quarterly wage, our gross pay, minus our total deductions,
would equal our net pay for employees. These are the amounts that the employer paid for FICA taxes, so their share of the Social Security and the Medicare taxes. You'll see there's a difference here between the Medicare taxes withheld for employees and the amounts paid by the employer. Again, that's because of rounding. That's going to be a rounding issue as well. They don't have to match. Oftentimes they do, oftentimes they don't. All right, total taxes per payday. So per payday, employees FICA tax $577.53, employers the same, Medicare $135.08, $135.07, and then federal income taxes. So they had a total of $13,231.26 deposited during the quarter. None of the employees reported tips, okay? That's important information. Now we're gonna prepare the 941 using this information. Let's see if we can, I'm gonna do something here so I can, actually, yeah, I don't know. I wish I had two screens I could use. Hold on just a second. I want to. Other than scrolling up and down. Just handy. Okay. So here is our form 941. They've already filled out the identifying information here. We don't have to worry about that. So this is the first quarter, right? Date was that this was filed was April 30th, so this must be the first quarter. So we've got to indicate that here. Now obviously this would normally be a checkbox, but for our purposes it's just a drop down. Okay. How many employees received wages, tips, or other compensation during the quarter? Remember, here's our, now we'll assume they were paid, they were employed the entire time, and so they were there March 12th, receiving a paycheck. So what number do I put here? 4. Excellent. All right. How about our wages, tips, and other compensation? This would be our gross wages. What amount do we put on that line?
Is it the 55890?
Yeah, so the 55,890 would be on that line. All right, you can put, I don't know if they want the 0.00 probably. All right, federal income taxes withheld. Exactly, 4,680 right there. All right, we don't need to check box 4, right? Because we did have wages that were subject to Social Security, Medicare tax. So what was the amount of our taxable Social Security wages?
All of it?
All of the, same as line 2, in this case. Not always gonna be the case, but in this example it is, so. All right. Now what? This is a point at which you get out your calculator. $69.30.36. Be careful, don't use these amounts up here. Okay, we have to do the calculation again with the total amount of wages. So So this, again, this OASDI tax on an individual basis may be different. Here. Okay, next line. What's the next line we're gonna fill out?
5C.
5C, right. How much are we gonna put in there? Yep. We're gonna get our calculator out again. $16.20.81. Look right. All right. We don't have anything that's subject to additional Medicare tax. Remember, this is the first quarter. Even though they didn't give us that information, we already know that. Because this is the first quarter, and this is how much in wages each of these employees made. None of them is anywhere near the 200,000 yet. None of them is anywhere near the Social Security wage base yet, right? If this were the fourth quarter, we would need to know how much they had made in those prior quarters to make sure that none of them in the fourth quarter reached either of those thresholds, right? But because it's the first quarter, we're good. We don't have to have that information. All right. So we don't have anything here. Now we just add together. Again, we need our calculator. We're going to add these two together. 69.30.36 plus 16.20.81. 85.51.17. Oops. Okay, so add column 2, lines 5A through 5D on 5E. We've got nothing on line 5F, but now total taxes before adjustments. Again, read the instructions, read the line. It tells you exactly what to do. Add lines 3, 5E, and 5F. Well, 5F is 0 for us, so we're just going to add those two. 85.51.17 plus 46.80. 13.231.17. Sound right? All right, so at this point, we don't know if we're gonna have any adjustment for fractions of cents, do we? Because we need to figure out, we've entered what our liability is, but we haven't entered what our deposits were. Now we've gotta go and enter what our deposits were. That's when we're gonna figure out if we have to make an adjustment for fractions of cents here, okay? So let's skip over, we're gonna skip over these lines for right now, and we're gonna go over here. So check 1. This one, again, it would normally be a checkbox here, but this is they're a monthly scheduled depositor, so we're going to enter B there. Right? Yeah. Okay, so tax liability for months 1, 2, and 3. Let's go back to look at our amounts here. So how would you go about finding this out for each of the months? There were 6 paydays. Total amount of deposits was $13,231.26. Okay. They were all equal paydays, I'm assuming.
Take 13,231.26 divided by 3.
Yeah, you could do that. Absolutely. That'd be the easiest way to do it, wouldn't it? 13,231.26 divided by 3. 44.10.42. Nice even number there. I don't have any rounding there. So 44.10.42 for each of those months. 42?
Yeah.
And what was our total here? 13,231.26. All right. Oops. Skipped over. Now, total liability for the quarter, 13,231.26. total must equal line 12. Okay, we don't have an amount in line 12 yet. All right, so we know that this line 12 has got to equal 26 cents, and we're at 17 cents. So we're probably going to have an adjustment here, right? So again, once you finish that, total must equal line 12. Well, that's the amount you're going to put in to line 12. So 13, 2, 31, 26. You can kind of work a little bit backwards here. All right. So what do we need to do to get from 13, 2, 31, 17 to 13, 2, 31, 26? We need to add 9 cents, don't we? All right, if it were a negative, I think they just do, does it put it in parentheses for you? You just put a negative amount in front of it, I do believe. For us, we need to add 9 cents. We don't have any sick pay, no life insurance. Total tax after adjustments, now we're going to combine lines 6 through 9. There we go. Line 10, again, we have nothing on 11, A, B, C, or D. So line 12 is going to equal the amount on line 10. Total deposits for this quarter, including the overpayment applied from prior quarter. Okay, so let's look at the deposits. Total taxes, let's see. Oh, so it's right there. 13, 2, 31, 26 in deposits for the quarter. 2, 31, 26. All right, our deposits equaled the amount that the amount of our liability. Nothing here. Total deposits and refundable. There. Total deposits. You do need to make sure that each line that needs, if there's a sum, if you need to make a calculation in a line, enter it in. Okay, don't leave it blank. Balance due, none. Overpayment, none. All right, there's Stan Barker, he's already signed it. Let's check our work. All right. Check. Got another one here. It's the same one. Questions? Let's see, we've got 10 minutes left. I'm gonna try going through another one. Or any other questions that you have on problems? Yeah.
Can you go through 26?
26. Okay. Is this the one?
Yeah,
Or-
I believe so. Yep.
Okay. So in 2000, is there a part in particular that you're struggling with on this one?
It's the Graph John VP Finance.
John Graff. Okay. So you can see his annual salary is exceeding that Social Security wage base, right? Remember, our Social Security wage base is 142.8. So let's see here. So the officers are paid semi-monthly on the 15th and last day. Compute the FICA taxes to be withheld from each officer's pay. Now the first one is November 15th. The second one is December 31st. All right. So remember, we've got to figure out how much did they make up to this point, right? Is it over or under that threshold? They're paid twice a month. Did you with A or B or both of them?
What do you mean by that?
Well, there's two parts to this. So there's part
Oh.
A and then there's part B.
Yeah, A.
A? Okay. All right, so let's, we can start with with Tim Hanks here. So we need to figure out how much he's made up to this point, right? So 168 is his total salary. They're paid semi-monthly. So how many pays per year is that? 24. So he makes $7,000 per pay. If this is the November 15th pay, that means he's been paid up through October, right? Is this the 15th and the last? Okay. So he's been paid up through October 31st. So how many pays has he had?
That's
This is his 21st pay, right?
21st.
Right, because he's got 4, including this one, he's got 4 more up to this point. All right, so he was at 140,000. This pay is going to put him over that 142.8, right?
Yep.
So only the amount up to, that gets him up to 142.8 is going to be subject to Social Security tax. All of his current salary, though, is going to be subject to Medicare tax. Right? Okay, so we're going to take the wage base, 142,800, minus how much he had made up to now. $2,800 of his $7,000 is subject to Social Security tax during this pay period. So let's figure out his, oh, put it down there, 2,800. Medicare, all of it, right? So for each of these employees, first thing we need to do is figure out what their wages are for the period that are subject to this. So the 144 divided by 24 makes $6,000 per pay, times 20 pays that have already occurred, 120,000. Now that the additional $6,000 pay is not going to get him up to that 142.8 in this pay period, right? In the final pay period, however, it will. Okay, so here, it's going to be 6,000 and 6,000.
Okay.
Okay,
Yep.
so 6,000 times 0.062, so 372 for the tax, and then 6,000 times 0.0145, $87. And then for Tim Hanks, now same for each of these employees during this pay period. In fact, for all of these employees, the rest of the employees, they're not even gonna get up to that Social Security wage base. And so all of their wages are gonna be subject to Social Security tax and Medicare tax. But let's do, so 2,800 times 0.062, 173.60. And then the Medicare tax. $101.50. Okay. Now, let's look at the next. This is the December 31st pay period. How much of Tim Hanks' wages are going to be subject to OASDI?
No.
None. Right. He reached that threshold here, so his tax is going to be none. How much of his wages are going to be subject to Medicare tax? All of it. So this is not going to change. Right? Now, John Graff is the one that is reaching that wage base during this pay period. So he makes $6,000 per pay period. How many pay periods has he had up to now? 23, right? So 6 times. So he was at 138. So we'll take the 142,800 minus 138. 4,800 is going to be subject to, I'm sorry, 4,800 is going to be subject to Social Security. How much is going to be subject to Medicare? All of it. Right. So the Medicare is easy, that's not gonna change. 4,800 times 0.062, 297.60. Did that answer your question?
Yep, it did.
Okay, good. Anybody else?
I have one that I can't figure out.
Okay, tell me what it is, and if the others need to leave, that's fine, but.
It was the extra mile on number 2. It was number 3.
So tell me which problem number that is.
Number 2 problem.
Oh,
The extra mile, and then it's problem number 3 there on the extra mile. And
Par-
it's for the total HI withholding that I couldn't figure out.
okay, so, and what they're asking up here is for the current pay period.
Oh, it's current.
Yeah, yeah,
Well, they're asking 2021 withholding, like the whole year.
well, down here they ask, so, year-to-date earnings, OSDI, yeah, Parker's 2021 OASDI withholding is this, but his total, it's so poorly worded.
Okay.
It's very poorly worded, so be careful, make sure you,
I was doing the whole
Yeah.
year.
yep, so try that and see if that helps.
Thank you.
Are we doing midterm review on Thursday?
Mm-hmm,
Okay.
yep,
Okay.
yep, and if we have time left over, we can look at homework then too, okay?